Okay, greetings everybody. Welcome back to Amato Talk TV. Markets and the economy. Two big issues on the minds of a lot of Americans these days, particularly here in this election year. Joining me at this time to discuss both issues is Ed Najjar. Ed is a managing director of Micromedia Strategies. Ed Najjar is a 20-year veteran of the financial services industry, having begun his career at Merrill Lynch. Today, with Micromedia Strategies, he advises CEOs and some of America's leading executives on how to communicate their message effectively to the investment marketplace. Ed Najjar, welcome to the program.
Thanks, Rick.
Here we are. In a economy, to be kind, that is pretty sloppy, to put it kindly.
That's a kind word.
Financial markets happen to be up. The equity markets are up. The economy is at what it is. What are some of the things that investors out there should be looking to do if their goal is pragmatic long-term growth, let's say?
Well, Rick, you know, the markets right now, I have basically two words: free money. And Bernanke right now is basically got the printing press on full blast, along with the EU, along with the IMF, and you have this massive, how can I say it, just inflow of money coming into the markets. And that's,
you're referring to like the printing of money.
I'm talking about the printing of money. I'm talking about why you see the Dow sustaining, higher highs as of recently. And a lot of this has to do with the fact that, essentially companies can borrow money for free. And this is a short-term Band-Aid, if you want to call it. It's going to be a nightmare as money starts to flow back out. And I don't know if you caught Bernanke today. He was talking about they're leaving interest rates where they're at. That's 0.25%. And he said that the Fed has plenty of tools. If they need to use them, they can still use them. So that indicates to me that the open money policy is going to be intact. It's going to create a ultimate long-term burden on the dollar. And that's where I would lead into where investors should be looking. It's tangible assets right now. It's assets that you can accumulate, whether it's art, precious metals. It's basically commodities. And the reality is, at the end of the day, you can burn paper, but you can't burn metal.
So interesting. So we've had economists on who say pretty much what you're telling us today is that the Fed is just flooding the marketplace with money, and that is not good long term.
It is terrible long term, and the pain is going to come, and it's going to come when it's least expected. I think we're going to see inflation numbers, which is obviously the Fed's biggest concern, to keep those as low as possible. But inflation will ultimately seep in. There's no way to avoid it. History proves that. If you look at what the Germans did after World War I, they were printing mark everywhere, and you would have to take literally a wheelbarrow full of mark just to buy a loaf of bread. The Japanese, and Bernanke actually alluded to this, the Japanese 15 years ago, they brought their interest rates pretty much to zero. It's been there ever since. The Japanese market is pretty much stale. As far as that's concerned.
Let's shift gears for a moment, Ed Najjar. We get the picture you paint. This show tries to do what it can to be an advocate of capitalism, an advocate of small business owners and businesses in America. You just painted a picture that creates even more challenges for business leaders. Knowing what you now know, what you just told us, what would you be advising those CEOs, those business leaders today who've got to navigate these economic waters? They've got a business to run despite what Bernanke may do or may not do. How would you advise those CEOs to operate in this marketplace?
That's a good question, and actually it feeds right into what I actually wanted to tell you. CEOs today, and I'm talking about CEOs that are running legitimate companies. I'm not talking about these shell companies that just happen to have a name and a bunch of people following something they really can't. I'm talking about legitimate companies with legitimate business models, whether it's a product or a service, something you can actually feel and quantify. These business owners and these CEOs and executives should, by all means, try to get in front of cameras, in front of new audiences, to talk about their companies, to talk about what in specific they are doing, And what's more importantly is to be able to substantiate and give evidence as to, and that lends credence to why you should be, let's say, investing in their company. We focus primarily on smaller cap companies. What we like to do is study what the company does, and then at the end of the day, I think we all have to look at it as psychology. And people are going to gravitate towards where they think they're going to make money, and that explains, for example, Apple. I mean, Apple's at $600 a share. You've got several people saying sell short and get out of Apple, and then I'll say I would not fight the psychology of Apple. The psychology of Apple is they can't make the product big enough, or they can't make the product quick enough, and you've got such a demand on it. You want to take a short on Apple, be my guest. But I'll tell you, based on the psychology and based on the amount of people that are buying Apple shares, you're going to probably get burned. And a lot of people, I'm sure, learned that after they announced their earnings yesterday, and the stock's up $50 today.
All right, so my takeaway is in this environment, which is challenging for all, CEOs need to get out there and amplify their message.
Yes.
Amplify, don't just amplify it, though, amplify it in a way of credibility.
Absolutely. Substantiation.
And don't fight the psychology.
You don't want to fight the psychology. I mean, there's a lot of companies out there that are great companies. And then you look at their stock and you're saying, why does the stock keep going down? It's not going up. I can give you several of examples. Companies making money. People are selling that company and going into where they're seeing, let's say a good cash flow into. And then I hate to use the Apple example, but Apple's a good example. But take a look at the oil companies, ExxonMobil, some of the other production companies that are out there. In steel, for example, is a great company of a lot of people looking to profit off the steel industry.
Right.
So yeah, it is about having the psychology in your favor. It's about people understanding that this is where I want to be. This company produces a tangible asset. That's where I want to be. I want to be where people are putting their money, not where people think they should be putting their money based on what they think or feel.
All right, Ed Najjar, a message is be proactive, Mr. or Mrs. CEO.
Absolutely.
Okay.
Get in front of those cameras, talk about it. I'll give you one quick example. Robert McEwen is the CEO.
10 seconds.
Robert McEwen is the CEO, got on Kitco Live and was able to move Monera Andy's Mine, which is an OTCBB company, was able to move it from $1.60 from the time of his interview up to, I think it was around $2.40.
All right, great example. I'm Rick Amato. We're back right after this.